welcome back our good friend, James Seramba. Jim is here. Of course, he's managing partner of Gray Oak Wealth Management, and it's so good to see you again, sir.
Thanks for having me on.
You've come to take pity on me and educate me again on yet some other topics. And this one, I think it's going to be some good advice here because I want to talk about something called built-in growth components. So my question is, tell us about making income with what's called built-in growth component.
Well, the greatest threat to a retiree is probably not, unless they're very elderly, is not the day-to-day fluctuation in the financial markets. It's actually outliving their savings. A 65-year-old couple today has an 85% that at least one of the spouses will live to be age 90. So you have to really invest with a 25-year time horizon.
Right.
If inflation only averaged 3%, and I would say that for retirees it's actually higher than that, during that time frame, their cost of living would literally double. So if they don't have a built-in growth component to their savings plan, there's going to be an erosion in their standard of living for inflation, or they're going to basically spend down their assets.
All right. Now, we didn't rehearse this, but let me just say, if I'm in a position where I'm trying to make these investments, I'm just assuming that whatever investment I make, it's going to make so much money for me in terms of interest and whatever, and that's going to take care of things.
Well, you really can't look at it that way because actually, historically, the stock market, for example, is only creating wealth about a third of the time.
I didn't know that.
The other two-thirds of the time, it's either in a declining phase or it's in a recovery phase, just making up what you lost.
1/3 of the time is all we make money?
Yeah, basically, if you think about it, at the start of the decade, we had the big sell-off, you had the recovery, and now it's only now that we're starting to actually make money again for folks if they rode the market down and back up. In fact, there was an article in USA Today talking about that last Friday.
So what's the solution? What do we do?
Well, if you're spending down your assets, you really never want to be spending into principal.
Okay.
So, one of the things that we look at is how to generate income with a growth component. And you can do that with a diversified portfolio of stocks. A great example would be like Citigroup, pays over a 4% dividend yield, trading at 11 times earnings. It will probably provide some growth in your actual asset base, but more importantly, they're increasing their dividend every year by almost double digits. So if you're making 4% this year, you'll be making almost 4.5% next year.
Okay.
You can add on top of that a covered call writing campaign, in other words, sell call options against your existing stock positions and generate additional income into your portfolio, and effectively generate maybe 8% off your stock portfolio without actually touching the principal and allowing the principal to grow. Okay. You can invest in real estate investment trusts. You can do that both through the publicly traded ones or the privately placed ones if you have the net worth to do that. Right now, overseas, they are just now going to the real estate investment trust model that we've enjoyed here since the 70s.
Right.
It's going to unlock a tremendous amount of value for investors, and that's probably a good place. And then lastly, you can invest in what's called closed-end mutual funds. They're very similar to regular open-end mutual funds, but a lot of times because of the way they're structured, they have a much higher cash flow component.
Right.
So again, you can generate a good current cash flow, but you have some growth. The bottom line is you want to generate a good current cash flow and meet your income needs with cash on the barrelhead, not dipping into your principal.
All right, well, that's good to know. And we see, once again, the information for James Seramba and Gray Oak Wealth Management. And please give him a call, check out his, we may have his email address up there, I'm not sure, because lots of good advice. I was shocked by what he said about we only make money a third of the time. Of course, I never make money anyway, but most normal people only make it a third. That's scary. Thanks, Jim.
You're welcome.
All right, we'll see you next time.